Hey everybody, Brian here from quantlabs.net talking about another article put up recently on ft.com Financial Times. Headline is Quant hedge fund set to surpass $1 trillion dollar management mark. So as of October 2017, these type of funds are at 940 billion, and more money flows into these funds. Also, with the algorithmic approaches and automated approaches, a lot of strategies are built around these. So this is where the growth is, as with a lot of the older school, let's call them floor traders, are getting clobbered and losing jobs. And a lot of these new growth areas in finance are being focused on data scientists and programmers to help facilitate these trading ideas. Here's a quote from some guy, Philippe Jordan, president of CFM, French Quant Fund, said, past decade, the result of systematic quantitative investing have been undeniable. People have gone from being skeptical and uninterested to being artificial intelligence groupies. So one of the examples that we've talked about is how Two Sigma out of New York has now got $50 billion under management, which puts it at the same level as Renaissance Technologies and D.E. Shaw, but they've accomplished it in a much shorter time frame. The same person at CFM expects to double his staff in 5 years, and that's where the growth is. We've been predicting that for quite a number of years now, and it's starting to take over. Another good example is how Goldman Sachs is no longer an investment bank. They are a technology company with over 1/3 of their staff now software developers or computer scientists. So that's where the growth is. Traditional hedge fund and even mutual fund groups are reinventing themselves as more computer-driven firms. Morgan Stanley analysts recently estimated that quant strategies ranging from newer breed of ETF funds to sophisticated hedge funds have grown at 15% annually over the past 6 years and control about $1.5 trillion. When you look at the growth of the ETF funds, you can easily look up Vanguard high frequency trading. They're probably one of the biggest high frequency trading operators out there in that world, and their growth has come from high frequency trading. I've got lots of videos on that. Just go to my channel and look up Vanguard for that. And those were years ago. I'll just show you an example here. So if you go to my channel here, I don't know what's going on with this stupid browser sometimes. Anyways, so if you go to my Quant Labs net, if you do a search for Vanguard, here we go. You'll see lots of videos on that, on how Vanguard has set one of the early standards on that. And it's worrying some fund managers, which is true here, that because there's so much money going into these both simple and complex algorithmic trading strategies, it makes the markets more fragile and complex, which is true. And that could be a weakening point of, let's say, a scare that we could call it, bring down the house of cards of Wall Street. No different than what happened in 2008. Packaging increasingly complex strategies in ETFs that are sold to retail are particularly alarming. Well, I guess you could say that really comes down to the retail investors, or another way of saying dumb money, should really know where their money's going, instead of just putting in a Bitcoin with a soccer mom's piling in back in December of last year, and not really understanding how it works. Just put money thinking they'll make money, and then they get clobbered. It's a typical greed mentality, and sheeple mentality as well, that you do really need to know where your money's going into, and you really cannot blame this type of movement on putting money into these type of funds. And also trying to regulate it's probably not a smart way to go as well, because as we know, that can be invested outside the U.S. where regulation no longer is. And then finally, this quote. This is when algorithms coexist in complex systems with the subjectivity and unpredictability of human behavior, unforeseen and destabilizing downsides. They wrote in a report, they ignore and they intensify until they become undeniable, which they're at now. We have little doubt the same will prove true for the algorithmic revolution in asset management. Very, very true. So there you go. That article again is called Quant Hedge Funds Set to Surpass 1 Trillion Management Mark. Growth propelled by interest by more systematic, computer-powered investment plans. Okay, so there you go. Hopefully I'll help you out for today on January 9th. Talk to you later. Bye.